Good evening, ladies and gentlemen. This is the BYOB, Be Your Own Bank training call. So tonight, understand, tonight is about training. Tonight, we're going to take a deeper dive. Tonight, you get your questions answered. So we do live training in the mornings. We get on here, we cash out together. We are live. But in the evenings, especially on Tuesdays, we are definitely going to educate. So last week, we actually began a training. Okay, we began a training last week where we were utilizing the Harmonics scanner. I want you guys to get the maximum out for your investment. I want you to understand that this is a phenomenal platform, right? So this is a phenomenal platform where you definitely can maximize. This is how you become the bank. This is how you become the signal. So this evening, in the evenings, on Tuesdays and Thursdays, we're training. And of course, on Thursdays, we also trade. So tonight, I want to continue our training from last week. I definitely want us to be able to do that, answer your questions. We're going to reiterate. And then Thursday, we're going to pull it all together. Last Thursday was Thanksgiving. We didn't get to do that. That's fine. You got to spend a day with your families. And I even saw in the chat, some of you all still were cashing out. So tonight, we're going to take that deeper dive. So as we begin, let me get my screen share going. While I'm doing that, if this is your first time on a call with us this evening, I'm about to say morning. You see, I'm ready to go live in the market. But if this is your first time on a call with us, I need you to drop a 111 in the chat. This is your first time on the call. I need that 111 in the chat. If you have been on the call and you are still learning how to cash out, I need that 222 in the chat. That's what I need you to drop in the chat. So welcome. Now, there's a couple things before we get into that I want to share with you. First and foremost, I want you all to understand the value. Welcome back, everybody. Welcome back. And welcome to you that you're here for the first time. Welcome this evening. So I'm happy to have you all here. This is the BYOBCashout. So I want you to understand the value behind this tool, okay? This is where we're actually going to begin, is I want you to understand the value behind a Vibrata. So this is where the BYOBCashout is housed. And yes, I had a wonderful Thanksgiving. Thank you for asking. But this is where the Vibrata is. The BYOBCashout is in the Vibrata. And I want to make it clear that even though what we're diving into is, I'm going to show you all some things with the strategy. I'm going to show you all we're going to take a deeper dive, but the foundation is always your 10 pips and cash out. That's the foundation of this strategy. However, it's not just a scalping strategy. So that is definitely the foundation. And then of course, where everything is housed, you don't have to change any settings. You don't have to do anything. Where it's been back tested, you don't have to worry about delays in the market based on the currency pair that you're trading, and just so many other things. No matter what we do, bring it back to the Vibrata. So I want you to understand the value. So I'm gonna play this video for you. Many of you all know who this is. This is Mr. Gerald Rogers. He is definitely the visionary behind BYOB. So I definitely want to play this. His background is investment banking. So I'm playing this for you right now so you understand the value of the tool and why you need to have it.
Wow, folks, I'm just absolutely amazed to know that I'm a part of an organization looking to empower and impact lives across the globe. I've been in this space for over 20 years, commercial banking, lending, and when I look at the web analyzer in comparison to what the big banks of the world utilize, that web analyzer is equivalent, far exceeds the expectation that I was anticipating after having that experience on the investment market. So folks, for those of you who don't understand the magnitude of what you have your hands on, I encourage you, I challenge you to take a deeper dive and realize that literally you have in your own hands the power to become your own bank and allow us to be your partner, to empower you economically, financially, and leave a true legacy.
Now, I did that to show you, because I know so many of you all just log on, you keep going, right? You just log on and you don't come back and watch a video, right? You're trying to get to where you're going. So, you know, that's just like most of us. We don't read the directions. We just jump into things. So I wanted to make sure that you all actually got to see what that is, all right? I just wanted to make sure that everybody got to understand the value behind what it is and the tools that we are utilizing. So that is that. That's first things first, right? First things first. So, okay. And of course, this thing is trying to mess with. Here we go. So that's that. So where are we going to begin this evening is now, why are you becoming your own bank? Why are you becoming a signal? Why are you doing that? Let me share something with you, okay? A few things. Now, what we're mostly used to and what most of us are used to is what we're taught. You know, my background, I do have a financial background, financial advisor, and I want to let you all know that what we're taught is to buy a stock and to invest in it, okay? You understand the power, when you say the power of the tools you have, the power of shifting your mindset, because we buy a stock and pray and hope it rises in value. Now, if I was to ask you about Uber, if I was to ask you about making sure, if you wanted to buy some stock in Uber, we know Uber is rideshare. We know Uber is the dominant name that you always hear. Uber is the joke. When I'm transporting my daughter in the morning, I'm talking about I'm her Uber driver, right? So we understand what Uber is. Uber is a household name. So even with a household name, you look at this. When do you buy a stock? When do you get your statement? You get it monthly. So I have it on the monthly chart. Uber hit the markets, right? It went public. Now look what's happened since it's gone public. So it peaked in value already at $47 a share. That's where it peaked, around $47 a share. Now, if you would have bought that, okay, when it first came out, this is where it was in this range. Now, so when it started, it was no less. The lowest price that it was that first month was $36. You look to the right and you see those $36. So I want you to focus on becoming the signal. And I want you to focus on becoming your own bank. And I'm saying that because when you see this, if I would have bought this at $36 a share, okay, if I would have bought this then what would have happened is it would have dropped. And so now I'm at $29 a share. So at $29 a share, if I would have went to cash out, I would be in a negative. I would be in a hole. That's why you see people spazzing out so much when you like today, we were able to catch over 300 points on the US 30 for a drop. And that's because you've shifted your mindset and you're understanding market talk. You're understanding how the market, you're learning how to do what banks do, because this is not what banks do. Okay, this is not what they do. This is what, this is what we're taught to do. So we're talking about shifting your mindset. That drop, you can profit, right? I sold Amazon using the BYOB cash out strategy, was able to sell Amazon and Apple this morning. I didn't purchase a stock, but I sold and I cashed out. So you're looking at Uber. You can do the exact same thing. And so this is what we're talking about as far as how you expand. And this is why it's so important for us with BYOB to make sure that you are the signal, to make sure that you understand the big picture, to make sure you understand why you're doing what you're doing. So that's why this is so important to us. So let's jump in here this evening, and I want to help make sure everyone understands what the BYOB cash out is. Okay, can you see my screen? I got a message that says you can't see my screen. Is it my internet or theirs? Can you, let me just get someone just, okay, thank you. So, thank you so much. So what we're looking at is the BYOB cash out, okay? BYOB cash out. And so with the BYOB cash out, I'm going to help, I want you all to see, and I'm gonna pull over, I'm gonna come here. Now, the foundation, this is the foundation of the strategy. Now, I'm going to highly recommend, and I want to show you this compounding sheet as well. And I'm going to show you why this is so important, that you want to understand the strategy at its foundation first. And even if you never go anywhere, when we're trading in the morning, I'm going to take a deeper dive, because I have individuals on here that are here for the first time. Then I have individuals that are still learning. And then I have individuals that are far more advanced, and they're cashing out on their own. They're doing higher time frames. They're looking at different things. So we have to make sure we address everyone. But I want you to understand the BYOB cash out and its simplicity form of what the strategy actually is before you take this to the next level, before you attempt. And I'm gonna grab another currency pair. I saw 2 trades on there, but I just wanna, let's just make sure that we're all, let's see here. Wanna make sure, I'm gonna come grab another one. Okay, this is better. Something more clear for you all when we're actually learning. So now, what I want to show you is the foundation of what the strategy is. I don't want you to overcomplicate it. I don't want you to get confused. I want you all to understand it from 3 simple indicators. That's what this is. It's 3 simple indicators, 3 simple confirmations. That's what this is. Now, what you have is the stochastic, okay? We have the stochastic. The stochastic is always first, and it's always first because it's a leading indicator. Now, while I'm training and while I'm talking, if you have a question, drop it in the chat and I will address it. Tonight is a training call. It's a training night, and we want to make sure everyone's questions get answered. So here's your stochastic. Stochastic is always first. Your stochastic is a leading indicator, okay? That's what this is. Now, it's a total of 3. You have Hikinashi candles. Hikinashi candles are trend candles, okay? These are trend candles. And what these trend candles do is they actually show you the trend of the market. Now, if I was to show you what underlies beneath it, trend candles, Hikinashi candles are indicators, okay? They are indicators. So it is an indicator. This is what Japanese candles look like. Matter of fact, I'm gonna drop an arrow just so you all look and see what I see, because I want you to focus on how different it is, right? So if I start from this candle right here where we had a flat top candle, and I change this over to my Japanese candles, you see the difference in the candles. You see where this candle actually started way down here. It's not a red candle with a flat top up here, okay? You notice that these are different. So this should answer anyone's question is, do I have to wait for the candle to close? What is it that I'm looking for, right? This should answer anyone's question. You are looking, they're indicators, so they've already done all of that for you. I don't have to wait till my 2nd, 3rd, and 4th candle. I don't have to wait till the candle closes. I don't have to do any of that. What I don't have to see, is it a double rejection? Is it engulfing? You know, those are the things. You don't have to do that because it's all calculated for you. When I come to Hikinashi candles, look how smooth they are, right? They make the charts just look so much cleaner, right? So they're measuring a trend. So this is what that is. Now, those are Hikinashi candles. This is a PSAR. This is a parabolic stop and reverse. Those are the dots, okay? The dots. So with that being said, with these being the dots, what you're looking for is a reversal. This actually shows reversal in the market, okay? It's a reversal in the market. So when my PSAR is on the top, then I'm selling. When my PSAR is on the bottom, I'm buying. So if you think about this in its simplicity, you have the stochastic running from 0 to 100. My stochastic at the top, when it's at the top, it's ready to go down. I have a red candle with a flat top, it's pushing downward. I have a PSAR at the top. So you notice everything is at the top. Stochastic at the top, flat top, PSAR at the top. When I'm buying, stochastic at the bottom, flat bottom, PSAR on the bottom, right? That's what you're looking for. So this is a strategy. As I told you, the stochastic is a leading indicator. So I'm always looking for this first, okay? First. So when that blue line crossed over the red, okay? blue line crosses over the red, downward momentum, and the stochastic must be here. How do I locate the PSAR? The PSAR is already on the chart. So the PSAR is already on the chart. So notice that I look for the stochastic first. So the PSAR is already loaded. All the indicators are here. So once I notice the stochastic, then I'm looking, the PSAR is either going to be on the bottom or it's going to be on the top. It's always going to be on the chart. It's just, where is it? You notice with this candle is below, then it flips to the top. This candle is above. So this is, you just need all three of them lined up. Now, let's make sure everyone is muted. There we go. So when I look for, notice that, you notice where I got that crossover, okay? I noticed that it's starting to happen. Look all the way to the right of the chart. Look against here. Now I'm doing that, right? I'm doing that because look what I'm doing, okay? Look what I'm doing. So now I notice my stochastic, but I haven't, oh, there I go. I got a red candle with a flat top. Now I need my third indicator. You need to have all three. I need you to understand you have to have all three. Now I'm still got my stochastics already happened because it's a leading indicator. Now when I look here, oh wait, my candle just got a wick in it on the top. Now I back to, you see my stochastic is still in this downward momentum. Now I have a red candle with a flat top again. Where, here we go. The next candle, I got my PSAR flip to the top. That's what I have. So now I have all three indicators, and now I have a valid sale setup. Okay, you're asking, where do I get those indicators from? You notice down here, depending on which, the newer version or the one in im.center, if you're using a Vibrata Nero, you're using this Vibrata that I prefer. If you're looking at this one, then they're both exactly the same. It's just one has a dark background, one has a white background. Okay, so but if you're, regardless of which one you're on, they're exactly the same. So you can log in through im.center, or you can log into imlwebanalyzer.com. This is where we are, imlwebanalyzer.com. You notice, you see the strategy, you know, look at the bottom of the screen. The strategy is BYOBCashout. You need to select the strategy right there. When you select the strategy, everything is preloaded. I do not have to change my indicators. I do not have to change anything. It's going to automatically load with the stochastic, with the Hikinashi candles, and with my PSAR. All three indicators are already loaded when you select the strategy. So, and then you're good to go. So now, would it have been a sale? It's a sale right here. So what is this? Yes, this, well, what is that? 1.30005. This is where we would have sold it. So if you would have got in right here, it's just a little lag in your pip reaction time. I like to call it your reaction time. So just how long it actually takes you, that's how many pips it takes you to actually get into the trade and get into the market. So it definitely would have been a sale. So if I drop this, I'm just dropping this for the purpose of training. Please don't draw all these lines like this on your chart. This is not a support and resistance line. That's not what this is. So if I drop this right here, you notice that this is where it would have begun. Now, if you are not using time frame confluence, if you are not using it, then I recommend that you do your 10 pips from here. What I always do is market execution, because that's the strategy and the simplicity right there. And then I always do use market execution, and then I go back and modify. So I'm on my phone, I analyze on the chart, then I grab my phone and I go back to my phone. And on my phone is where, on my MetaTrader 4 with my broker already, or whether it's you're in your demo or what have you, this is where you actually enter your trade. Now, because you don't know your pip reaction time, this is where this is really what that number you want to use for your take profit. So now you're talking about 10 pips, counting 10 pips from here. My stop loss is always here. However, if I'm doing time frame confluence, I'm just going to do 10 pips from my market execution, which is on the left side. When you enter the trade, market execution, and you go back and you look at that trade, you have two numbers there. The number on your left is actually the number where you entered the trade. The number on the right, Now, this is when you're looking at an active trade. The number on your right is where that trade is at currently. You do not want to use the number on the right. You want to use the number on the left where you entered the market. Your 10 pips is from where you entered that market. So that's when I'm using time frame confluence. So let's look at time frame confluence and see, let's look at time frame confluence, okay? So it's using time frame confluence. And I don't have everything marked. There we go. I want to drop down to my 5-minute chart. When I drop down, I had somebody just ask me about those dots earlier. I had never seen that. So when I drop down to my 5-minute chart, am I selling? Am I selling? When I get to this arrow, yes, I'm selling. So because I'm selling, the 5-minute happens first. Okay, the 5-minute happens first. So you notice that the 5-minute has been selling for a while. This is where my stochastic flipped on the 5-minute, right? This is where it flipped, and this is where this trade activated, right back over here. So the 5-minute actually started before the 15. You notice that it always starts before because it happens first. It takes 3 5-minute candles to make a 15. So the momentum and everything is going to be rolling from the 5-minute into the 15. So that has to have already happened. That's feeding into it. And then I want to go to my hour. And when I go to my hour, I'm looking for it to look like it's going to be a sale. Okay. This is where you have to start trusting your gut, your judgment, where you have to look at it and be comfortable with the trade. Okay. Not because when we're on a call, not because, oh, Miss Dyer said take a call or take a trade, not because you got a signal from somewhere, but because you're comfortable taking that trade and you understand why you're taking that trade. So what I'm looking for on the hour, on the 5-minute, I'm looking to make sure the trade is already happening, it's still happening, right? I'm still selling or I'm still buying. On the 1 hour, I want to know that the current swing of the market, is in a sell because I'm looking for a sell. So if I'd had this strong uptrend candle, no, I don't want to do that one. But what I want is the current swing of the market. See, this one had no pullback. It had absolutely nothing. Oh, excuse me. But it had absolutely nothing. But what you're looking for, you see this is now a red candle. It's not a red candle. So now that I know it's a red candle, okay, the swing of the market. I don't have a PCR flip. I don't have any of that because it hasn't happened yet, right? I'm not waiting for it to happen. I just need it to look like it's going to happen. And now because I know that, I know that I have a valid trade set up. And you notice that, okay, it went down 10 pips, okay? It went down 10 pips. On the right side is my pips. On the left side is always points. It went down 10 pips. I mean, the right side is pips. The left side is points. So it went down 10 pips. So you notice that, but it started pulling back up. So it did go down 10 and then it pulled up. This is why it's important that your stop loss is outside of the PSAR. It's outside. Okay, it's not, oh, it's 10 pips, it's 15, it's 5. No, it's outside of the PSAR. That's where it's at. So with that being said, let's talk about how this moves. So it moves down, okay? It got down to about 10 pips, like we just said, and then it pulled back up. And you see you were only maybe 2 pips in profit, and depending on where your pip reaction time is. And the reason I'm sharing this with you in detail is I need you all to trade comfortably and understand that the market is going to have pullbacks and not spaz out when you take a trade and then now you get a little pullback and you're like, wait, what's happening? What's going on with the trade? What's going on? No, it's doing what it's supposed to do. You just need to ride it out. And then it comes back down, right? It comes back down. And so you still got about 10 pips. And actually this one is still in motion. It's still there. So you would have been able to take this trade and you definitely would have been able to do that. So just kind of want to point that out. But the stop loss is way up here. And so if you didn't get your 10 pips initially, or you could have closed it out, because this trade's been going for a while, and so now it's actually in what you call a channel. Okay, it's in a channel, even though this is not what we're training on supposedly tonight, but I see it, so I'm gonna tell you about it. So it's in that channel. And so if you don't, this is when you start understanding these things, you don't have to ask, do I jump out of the trade? Do I ride it out? What do I do? You can understand. Now, let me change the color for you. You can understand that you can just ride it out. You can make your own decision. Do I exit the trade with a few pips in profit? Do I take 5? Am I comfortable? Because it covered 10, but did I get in where it would have covered 10? You can look at this and understand. But understand the basis of this strategy, period, is 10 pips and cash out. So now you understand that. And I want to show you something that can actually help you understand it. You don't have to like get, you don't have to try to, you know, I don't need to be this master trader that feels like I have to do 50 pips per trade in order to, right? I don't have to do 50 pips per trade in order to say, you know what, I'm going to cash out, or I need 50 pips per trade in order to make money. So where are you funding your account with? You see, I actually have this set to a 5% growth, 5% growth. This is actually in the Facebook group, okay? This is in the Facebook group. So if you want this compounding sheet, go to the Facebook group and get it. We're here to help you be the bank. We're here to help you be your own bank. We're here to help you become that person. So this is important to understand. If you paying a loan, if you got anything financed, or you doing anything, they're compounding their interest. So you got to learn how, remember, you're a bank. You are the bank. So if I'm paying compounding, I need to compound what I'm receiving, right? So let's not just do 0.05 or 0.10 and just 0.2. Like, no. Let's do everything systematically and everything. You should never, I want you to walk in expectancy. You create an expectancy for your accounts. You create an expectancy for your trade accounts. You create an expectancy for your results. Create that expectancy. And with that expectancy, that's where you will get those results. So just like I'm quite sure you heard, I heard it, and not from anybody in BYOB, but I heard it when I started trading and I didn't like it. Oh, you're going to blow your account. You know, no. Create an expectancy. If you create an expectancy that you're going to blow your account, you're going to blow your account. If you create an expectancy that I'm going to compound and I'm a millionaire, I saw it in the chat. I'm a billionaire. I'm a millionaire, right? I'm the signal. I'm the master trader. You create that expectancy, that's what you're going to walk in. But we want to show you how you do that. So I can start my account with $100, okay? Oh, it started with $100. And if I got $100, 5% growth, what that tells me is, look, so that means that I'm trading at a 0.05 lot size, okay? A 0.05 lot size. I'm not doing a 0.20, I'm not doing a 0.50, I'm doing a 0.05, okay? And so this is for 10 pips, 10 pips. That's what this is for, 10 pips. So you wanna go up to 70, now you're in the second column, or 73, you're in the second column. But we're talking about 10 pips and cash out. So you notice that, look at the difference. If I go for more than 10, look what happens to my lot size, it drops. My lot size drops. So you notice that my lot size does not increase, right? My lot size does not increase until my account balance is 240. When I'm doing that, my account balance has to be 240 before my lot size increase. So if I'm swing trading, look at my lot size, it's a 0.01. So, but you notice that when I got 240, if I'm doing 10 pips, my lot size is now up to 0.11. So you want to do this systematically. You want to do this through compounding, and you want to build your account. So you notice that it's steadily increasing as your account balance is increasing. So now these are for trades, right? These are for trades that, okay, I have actually, these are successful trades. And you might hit stop loss. Oh, that's okay. You want to make, but because look what this is cushion for 15 to 20. Your stop loss should never blow your account. You want to make sure, that's why this is important, because you want to make sure that when you're trading, it's about the proper risk reward. Okay, it's the proper risk reward. I understand that with the strategy. Well, what I just showed you, it's in the Facebook group, BYOBCashout in the Facebook group. So when you are trading, you're trading with the understanding. So the 92% accuracy rate. And I just showed you how you can literally do higher. I think we hit stop loss yesterday. I think I did one and we hit a stop loss, but I think it had been like 2 weeks, maybe almost 3 weeks before we hit one before that. So in it, you know, and I think I'm being, you know, more critical because it might be longer than that. But I don't like them. I'm quite sure you don't, but I'm okay with it is the point that I'm making. I'm okay with it because nothing is 100%. And so, but when we do, it doesn't take us out of the game. And that's because we're properly compounding, we're properly building, we're properly multiplying our money. And when you do that right, so understand that my risk reward, 15, okay, we can 15 pips. And sometimes it's only 8 pips that I hit a stop loss with. Sometimes it's 10, but this is calculated for up to 20. So when I do that, I can continue building. So let's say I hit a stop loss. Let's say I got them up here, right? I got my account to $171 because we started with 100. I hit a stop loss. Let's just say it knocked me down to 155. So instead, I don't stay here. I come back to 155. I look, okay, I'm at 0.07 for my lot size because I don't want to over leverage my account. You determine your risk. Let's say you only want a 2% risk. Only want 2% risk. Why are we starting and focused on, you have to determine. That's why I can never tell you how much money you can make per trade, how much money you'll make trade. You make that decision. And this is how you make that decision. Play with this chart. So if I want a 2%, then I come down here. I don't even touch anything over 10 pips, right? Until I'm at $188, but I'm 32 trades in. I'm 32 trades in. So now you see that, okay, I'm just doing my 10 pips and cash out. And yes, it can get exciting. You're on a call and like, oh, this went for 60 pips. Oh, this went for 50 pips. Oh, we cashed out. We did this. Guess what? I need you compounding properly because you got the wrong lot size. You hit a stop loss. That's where you mess up. So if you have the proper information when you get started, you have the proper information when you get started. This is how you compound and how you go from there. You want the proper information when you get started, and that's going to help. So it is in there as well. It's definitely in there as well. But this is the one I've made some changes on there on this. I have made some changes on this. So the changes are not in the Telegram group. The changes are not in the Telegram group. So the ones that I've uploaded with those changes are here. So it's in the Facebook group. So definitely in the face. So that's why I'm directing everybody to the Facebook group, because I did make a few minor tweaks and adjustments from the one that's in the Telegram. So, I mean, you can come over here, you can do your earnings calculator. It actually has the tips on here. You know, if somebody's trading binary, you have that on there. You know, if somebody's doing binary, because once again, it works on everything. And then for your personal usage, you look, if you were working, right, if I'm trying to make $100 a day, look what you'll be making a year. But look at what your equivalent job is. So this is how you grow and how it helps you understand what you're looking at. It is BYOBCashout. BYOBCashout is the Facebook group. BYOBCashout, we will drop it in the Telegram. So, and if you're not in the Telegram, you can actually search BYOBCashout in the Telegram and Facebook. So, but we'll drop them in there. Oh, well, there you have it. It's already there. Appreciate you very much. Thank you so much. Now, I'm going to bring you all to I'm going to take you all back to the Harmonics scanner. But before I do that, I want to show you something that is very important as well. Okay? Very important. Now, we've been doing market execution. When we're trading together, we're doing market execution. Okay? But if you're going to do something more than market execution, now before you start touching anything else, I can't tell you what to do. I can just highly recommend is that before you start doing buy stops, sell stops, buy limits, sell limits, and you start doing all of those things, I can only highly recommend that you understand the strategy and that you at least give me 30 successful trades, right? Give me 30 successful trades before you start deviating, before you start doing other things. Give me 30 successful trades, okay? And that, because you want that market to talk to you. You want to hear the market. You want to have a relationship with the market. Your relationship with the market is not because Ms. Dyer said take a trade. It's not because Mr. Rogers said take a trade. You know, it's not because anybody, you know, your relationship with the market is how you're going to change your legacy. So give me 36. I mean, and that's just the number I'm putting out there. But I think after you've done about 30, that you're going to be comfortable. You know, you're going to feel a lot better just, you know, taking those trades and executing those trades, and you'll be comfortable with that. So if you give me that, I'll be quite happy. Okay. So, and you'll thank me later. So here you have a buy stop. Now, what this buy stop is I can make this purchase, and I'm looking for, you see how now you see these blue lines? These are support and resistance lines, okay? I want you to understand that these are support and resistance lines. That's what these are. So if I have a buy stop, what that means is when we're looking at those charts, okay? And when I pull up the harmonic scanner, I actually show it to you. But you'll see that I have a buy stop. So that means that I'm in that zone that we were just talking about that we were in. I'm in that zone. So, but I'm expecting it to break through there. But I don't want to be in a trade until it does. That's what a buy stop is. I do not want to be in a trade till it breaks through this resistance line. A sell stop it's in that zone. Now you see, pretend like this is that zone that we were just talking about. So we're in between these two lines. Now, when a buy stop is going to break out this way, so I'm going to place my buy stop somewhere above it. A sell stop, I place it somewhere below it. I do not want to be in that trade until the price goes up and through it, or until the price goes down and through it. Now, a buy limit and a sell limit, a buy limit means that it's currently going down. You know how when we're on a morning call sometimes, and we'll say, okay, this is gonna turn around. This is gonna go down here, but it's gonna go for a buy soon. It'll probably go down a little bit further, but it'll go into a buy after that when we're looking at it, and we can see how it's hitting on those support lines. That's when you want to place a buy limit, okay? And so what that means is it's gonna actually go through this line, but I don't want to sell. I may have every expectancy that it's going to turn around and go back up at that point. That's when I place a buy limit. A sell limit is the exact opposite. So it's currently going up. It's currently buying, but I have every expectancy that when it hits that line, it's going to go through that line and it's going to turn around and come back down. Okay. So put that in your kit bag, put that in your tool bag. It's something that's very important to understand. And with that being very, very important to understand, I need to, hold on, let me stop my share. Make sure I get my chart back up. Want to make sure. Okay, right one. So get this chart back going. And now, this is where we're going to help understand that. So it's going to put it in your tool bag, put it in your kit bag. Now, as we're going there, once again, drop the questions in the chat as you have them, okay? We've been learning. Now, once again, you drop the 111 and the 222 in the chat. You follow the basic strategy. You follow the foundation of the BYOB cash out. Okay, that's what I want you to do. Foundation of the BYOB cash out. So for those of you who have done your 30 trades, right, you're getting comfortable with the market. You're beginning to understand the market. The market's talking to you. Now you can start implementing other tools. You can start trading on other time frames, right? You can start doing all of those things. So this is where we are. So this is how we take advantage of the harmonic scanner. Now, understand, this is simply. Now, it's not simply because this is, I mean, it's value, right? Because we're talking about the harmonic patterns. So yes, harmonic patterns are in the academy, but the same way, you can't, as you're learning, right? We want to simplify. You don't always have to make a cake from scratch, right? You can make a box cake and you have a very good cake. So what you want to do, like I can look at this and tell it's a strong uptrend. Everybody can't do that. Everybody can't say, okay, impulse correction, continuation, correction, continuation, correction, continuation, right? I can see that. So can everybody see that? Look where it's coming down from, right? We started down here. Impulse correction, continuation, correction, continuation, correction, continuation, nice continuation. So you can see that. But then you get tempted to say, you know what? Do I take this correction? Do I not take that correction? Right? Do I take this correction? Do I not take this correction? Okay. So the same way. So if I say, okay, I see a harmonic pattern, can you see it? You might see it, somebody else might not see it. So it's all about developing that relationship with the market. So what the harmonic scanner does is it finds those harmonic patterns for you. So once again, just add water. It finds them. But this is not a standalone product. It's not meant to just say, okay, let me pull this up. Here's my entry. Take profit 3. That's my stop loss. I'm going for it. No, no, no. You will win half and half. There have been, if you've ever touched this before, you might have looked on here and you see, okay, I see a trade here, but now it's not there anymore. So why is that? Because yes, it identified a harmonic pattern, but that's all it did, right? That's all it did. It doesn't tell me that, I don't know, what did it do that, that I'm going to turn around and I'm going to try to find this, take profits, and what's significant about this? These are just support and resistance lines, okay? That's all this is, support and resistance lines. So, and which entry do I take? How do I know? It's got 2 entries on here. I don't know which one to take. So you do not want to just jump in this and just say, oh, I got a good trade set up. Now, let me tell you how this works. So you have the harmonic patterns, right? You got different brokers. I can't tell you which broker, they just scanning the market too. So I got EuroCAD that's popping up here. If it's at the top, that's the most recent. If it's down at the bottom, it was called a while ago. So they shuffle them down, okay? This is for 15-minute chart. This scans higher time frames, okay? So 15-minute chart, higher time frames. So if I see something on here, EuroCAD, Euro AUD, right? And I come here, okay, EuroCAD is way down here. So understand, if I'm swing trading, if I'm looking for longer trades, or if I'm looking for something that's longer, it might be on that hour, 4 hour. But I'm still come back and check it. When I show you how to take it over there, I'm gonna still come back and check it. And why am I gonna come back and check it? Because the harmonic pattern might not be there anymore. It identifies the pattern, but that doesn't mean I got a valid trade set up. Ding, ding, ding. So that's where this identifies harmonic patterns. That's what this is for, right? It's a harmonic scanner, harmonic patterns. What are these? Support and resistance lines. I can come back over here. Let's plug in GBP AUD. Okay, it's on the hour time frame. Doesn't that look like it? Okay, looks just like it, right? Did you see this harmonic pattern? Did you see it? Right, look like a double top to me, right? But what is that? What happens after a double top? So you got it, okay? And then what happens? So do I have an entry here or do I have an entry here? So knowing that this is a support and resistance line, since you've been trading with me and you understand what a take profit and where does my PSAR? My PSAR is a parabolic stop and reverse. My PSAR is a trailing stop loss. My PSAR is always around that. That's what that is about. That's why I'm stop loss is above or below it. So I can guarantee you that even if this is a valid setup and this is where you make your stop loss, when it pulls back, you're going to hit it and it's going to knock you out of the trade. The same way we don't put it on the PSAR, you do not put it on this line, okay? You don't. So come back over here. All I'm looking for is different harmonic patterns. No matter what broker I select, look, and if it's on more than one broker, the chances of it being a very good harmonic pattern it increases your probability, okay, if you see it on more than one broker. So do I have a preference of a broker? No, I don't. Somebody's already asked. I don't. I just scan it, and the same thing I'm telling you to do. and you'll see it, but as it starts moving down and your trade hasn't activated, if it starts moving down and your trade hasn't activated, the chances of it being a valid setup is slimming away. Unless, especially on the 15-minute chart, you know, and sometimes, like when we're looking at these, you see how we took this, it came back up, and you take this. But let's get this number and see where it's putting this entry point at 1.88906. Let's bring it back over here. And I just want to show you, right? I just want to show you. Like, I just want to show you that's all it is. 1.88. Right? What is that? Nothing more than a support and resistance line. Voila. That's all that is. So my strategy, BYOB cash out, your strategy, BYOB cash out, is already housed in a Vibrata. So you can take, how do I combine these tools? Come over here, identify a trade. You make your own take profits. I can do 89942, 89942. How about this? Let me make life simple. 1.899, what was it? 89942, 89942. Just make life simple. So what I have my support and resistance line right there, I probably adjusted a little bit, but that's okay. But understand that they're just telling you, okay, from here to here, this is where your take profit one is. So you come over here and draw your own support and resistance lines. Draw your own. So I just know it was a harmonic pattern identified that's telling me that when I get to this point, I could be looking at a buy. Okay, I could be looking at a buy. So you know that based on what you see, it's been in an uptrend and it started going into that zone, but it's telling you that you could possibly take a buy right there. That's what it's telling you. But GBP, AUD, and I probably need to come down to the 15-minute chart right there. So, but you notice, so that's all. And once again, why does that look different? Why does that look different? Because what are we looking at? You're looking at, these are Japanese candles, these are Hikinashi candles. They're going to look different. They're going to be, I'm not trading on the harmonic scanner. Let me make myself clear. I'm not trading on the harmonic scanner. But what I'm doing is I know that there's been a harmonic pattern identified. So I know that, right? I know that where it's at, it still needs to come down a little bit more, 1.88906. And that looked kind of far. 15, I did change it. Let me go back to the hour. So it's still up higher, but either way, so what you don't want, I don't know. I'm not even gonna get overworked about it, because what you're looking for is your confirmations. So what did that tell me? I see a support, I see a resistance line, right? I see a support and I see a resistance. I see a trade opportunity. I saw my stochastic, blue line crossed over the red, right? I'm always BYOB. Always. Here we go. Blue line crossed over the red and an upward momentum. Got my green candle. Does it have a flat bottom, right? Does it have a flat bottom? You go trade that harmonic scanner by yourself without applying it to something else. Even if you go through the academy, you know, I'm not contradicting anything they put out there. When you go through the academy, it will tell you it's not a standalone. It's not a standalone tool. It is not something that you trade by itself. So you notice that from when I got the flat bottom and I got my PSAR, I just happened to get PSARs first right here. So when I do that, it's pushing up. That was a 52 pip profit right there, 52 pips. So now, instead of just taking this once from here all the way up there, if I'm doing my 10 pips like I just showed you, you're looking at this and now you got potential trade opportunities. So you could have traded down from here. You got to trade up there, right? So look at what you're doing. Or you can just ride this, and do I see another? This is where I would put my support and resistance line based on touches. How do I draw mine? You follow me for any period of time, I change it to a line chart. And it help. Look at how clear that makes that. I change this to a line chart. Look at how clear it makes it, okay? Very, very clear. I got touches here. It's testing the line right here. You got more lines up here, right? You got more where they're coming up through there. So, or you could just come look at where they say they go and put them up there as well, because they're sitting on the top too. So, but I'm definitely coming back to my 15-minute chart. I'm trading off the 15-minute chart because, you know, I'm telling you, if you go for more pips on that hour time frame, you are going to get those pullbacks. Until you trade for a while and you start trying to trade off higher time frames, understand that you're going to catch the cycles and the pullbacks of everything that happens on the 15-minute, on the 30-minute, right? So you can be in a trade and you think you're doing good and it's going down with how you want it to do, and then you get a significant pullback. And until you build that account balance, your account is not going to be able to handle that pullback. Until you build that account balance, you traded the wrong lot size. Your account won't handle that. That's why that growth compounding chart is so important. That's why it's important to use. So now look at the different trade opportunities you have when you come through and you put that on there. So you see what I'm doing. So look at all these trade opportunities that you have. And then just to add a little something else to you, give you just a little bit more. Of course, you get more support and resistance lines when you are on the lower time frame, when we drop lower. But of course, we're gonna get that. But at the same time, when you just look at all these trade opportunities. And then, I mean, you compound it, you build it, you grow it, you cycle through it. And I mean, you just look at all of this. So you 10 pips cash out. I don't have to sit and wait for this to just ride from here to here to here to here to here. I don't have to do that. You can literally come through here. And oh, if I'm doing price action, okay, look at this. I'm on an hour time frame right now. A lot of price action is done from a higher time frame. So it takes that guessing game out. So if you have been a price action trader, if any of you have been price action traders, drop a 555 in the chat for me, because I just want you to see this. I know. So if you've been trading price action and you're trading you're looking at the setups, there we go. Now look at the setups and confirm this with me. So instead of you trying to, let me show you. I'm gonna take off my PSAR. I'm gonna hide my PSAR. No PSAR. I'm gonna change this to candles. Now, when you're looking at this on the hour, you're trying to figure out, I'm reading these candles. I'm having to read these candles to figure out if I can take this trade. I'm trying to guess. I'm looking at the zones that happen in between here, right? That's what you're having to do to try to read this, okay? You're trying to read it. You're trying to understand it. I need to know, is it turning around right here? Will it go up? What is it going to do? Okay, what is it going to do? Because it's for potential of a 50 pip profit, but your stop loss is going to be way out here somewhere. Because remember, you don't see any of this, just like we don't see nothing here. So I'm looking at support and resistance lines. I'm drawing trend lines, right? Trying to figure out what I'm doing. Got a trend line. Okay, I need a trend line here. Did it break the trend line? Is it going to come back down? Is it going to test it? I love how y'all like right on my screen. But I'm going to change back to my Hikinashi candles. Look, it still got the same trend. Can you erase that, please? I appreciate you. Thank you. Put my PSAR back on there. And when I do that, right, instead of me having to guess, when I got look at where my flat candles, look where I get my flat top candles. Look at where I get them. I get a flat top candle. See this support and resistance line? Look where my candle becomes a flat top. Look at that. Right? When it breaks that. Look at when my candle gets a flat top, when it breaks it. Look when my candle gets a flat bottom. Look when it gets that flat bottom. You see why those few things are so important, right? They're very important. That flat bottom, that flat top candle, very important. That PSAR flip, just like if I'm trading price action, I'm looking at this, I might have jumped in here because one of these might have been red under here. Let's see, was it? Let's just, So look at that. Wow, it was red. So I'm thinking, okay, I'm going to jump in a trade right here. I'm getting in a trade. We're going for a sale. Okay, I'm getting in a trade. Even yet, come back where you think, okay, I'm getting in a trade, it's going for a sale. But look how it tested it. So, but do I have my Hikanashi candles lined up to where they tell me, right? Are my candles? Yeah, somebody wrote on my screen and I have to actually stop my screen share. I asked them to erase it. I don't know why. You know what? Obviously it's bothering you. We were almost done. So I'm gonna stop it, share it back. Yeah, let me get my chat back up. Okay, there we go. So now, oh, you're welcome. So we were so close to being done with the time. I was trying to get through everything, but that's okay. We could take our time. So you notice that now, here we go. Like, I would have entered on those, right? It tested it 3 times. What I have now, before, this is where we were. And you were, oh, wait, how do I know, right? Because the golden rule, right? It's going to test it at least twice, maybe 3 times. This one tested it 3 times. Do I take a trade right here? Absolutely not. I didn't have a valid setup at all. So I would have never entered this trade. So if you're a price action trader, right? Some of you all before BYOBCashout, you would enter right here. And then you would have came back out and you'd hit your stop loss. Because your stop loss, of course, was going to be somewhere up here, right? You didn't have a PSAR to tell you where your stop loss goes. So you would have put it somewhere up here. You'd have been played a guessing game. Do I put it 10 pips, 15 pips, 20 pips? Where do I put it? So you actually would have came out and you'd have hit your 10 pips. You'd hit your stop loss when it retested that line because you would have never took profit. So if I did 20, I still would have hit my stop loss right up in there. So it peaked out. So no, nobody's out to get you, right? No, nobody's out to get you. The market, the people who move the market, they honest to God don't care about you. They care about their money the same way you care about yours. So you would have hit stop loss though. But if I'm using BYOBCashout, I would have never ended this trade because even though I had a flat top candle right here, okay, had a flat top candle right here, but I didn't have a PSAR flip. And I never had an actual reversal in the market, okay? So then when I did get the PSAR flip, I got a wick pointing out the top of this candle. So I'm gonna take this and I'm gonna make this an arrow so you can see what I'm saying. I got a wick pointing out this candle. So I'm still not taking this trade. So then we wait for it to come back. And when it comes back, and of course you probably would have checked your time frame confluence. So, but just not a strong one, but it does. So then when it comes back, now I got a flat top candle and a PSAR flip. And guess what? It actually comes down and it hits that. Then it goes back up. Then it comes down and breaks out. So sometimes, but for the most part, no. So sometimes, no. Look at how far in, like you see right here. I see what you're talking about. You're talking about right there. So, I mean, yeah, I know what you're talking about. But this is where that market talk is, right? This is where that market talk is. So if this is where that is. So even if I would have, right, and you would have taken that, if you would have did 10 pips and cashed out, you still would have got your 10 pips. But I'm talking about the ones that are looking for those long term. Yep, market talks, BYOB market talks. So you start understanding, I'm trying to get here. If I'm and that's why I was given a price action trading. So depending on how you're trading. So because price action, you're actually looking for support. You're looking for zones. You're looking for support and resistance, right? You're looking for all those kind of things. So, but if you're just doing your 10 pips and cash out, you would have got your 10 pips. And then you would have turned around. And of course, we would have checked the time frame confluence with it and everything else. But just the basic part of the strategy, you would have got your 10 pips. So do I have any questions, any comments, any concerns, anything you need to? I love you too. So any questions? I'm glad it did. No. The strategy is saved in here, and this is where it was back tested. I just wanted you to pull over I just brought you over here to catch that harmonic, the harmonic pattern. So you're not, I'm helping you take out the guessing game for when the market's going to turn around. But if you try to trade over here, you got to come in and you got to change everything. You got to mark it up. You got to, you know, and then it wasn't back tested on here. So I can't tell you what your results would be, right? I can't tell you that. I can tell you based on what we did and what I know to be true, this is where you want to trade it at. So that's what I can tell you. But you also, it's not going to save it here. You notice you'd have to come in. This is an RSI. We use a stochastic, right? This is an RSI. And these are traditional candles. So you still, you're changing more here. So, but the one thing I love about this is I can open up IML Web Analyzer. Look, I got 1, 2, when we're trading in the morning, I might have like 5 or 6 tabs up. So 5 or 6 tabs up. So I said the PSAR, and just so whoever said the PSAR flip, it's a PSAR flip. So the PSAR, you notice that every candle has a PSAR. We'll change this back to the crosshair. Every single candle has a PSAR, every single one. So there's a PSAR at every single one, right? Go down to each time frame. There's a PSAR. There's a candle and a PSAR. It's just, is it at the bottom or is it at the top? Where is it? So it's at the bottom and it's at the top. It's at the bottom or it's at the top. So when I say did it flip, I mean, if I'm looking for a sell, did it flip to the top? If I'm looking for a buy, see how it's at the top and then it has to flip to the bottom. And then it's riding up to the top, then it flips to the bottom. You also notice that this is like a trailing stop loss because that's why my stop loss is always outside of it. Even if my candles wick out, right? I get that pullback and my candles wick out. If the momentum does not shift, the momentum does not change, the momentum does not move, right? The momentum does not, guess what? That PSAR, I mean, it wicked out, but it's still, my stop loss is outside of that, so I don't hit my stop loss, right? It's all about protecting your trade. Even here, the momentum is downward, even though it's not strong down. Look at how it touches the PSAR, but it doesn't go outside of the PSAR. It will touch it. That's why I tell you, it's like a support and resistance line that moves with the candles. You never put your stop loss on that support and resistance line. It's always outside of it. So, but you see how these wicks from here come back and touch it, and then all of a sudden we get our drop. But you stop losses in here, right? I don't, unless I am if I'm just doing 10 pips, I just leave it. But if I'm doing more than that, then you can manually move it or do a trailing stop loss on your computer. So you're welcome. Signals, no, they are not signals. This is not a signal. What this is a, let me see, do we have one on? I'm gonna have to change it to the 4 hour. What this is a vibrate, it's a high probability. So to help you understand, like what this is giving you GBP USD, and this is actually called on the 4 hour, but they all work the same. So I'm gonna just kind of show you real quick what it does. So what the Vibrata does and why I like it so much, right, is it scans the market for high probability trades. So the reason why BYOBCashout works so well is because anytime you trade, you're looking for what's called areas of value. You get your entry trigger and then you get an area of value. Now, what this is doing is it's giving you your area of value. So let's put it on that call price. I'm sorry, not your area of value. It's giving you your entry trigger. So if I give you that, okay, it's telling you, so this is at that support and resistance line too, but the difference is there's something that triggered this, okay? So there's something that triggered this. So if I change back to the regular traditional candles, there's something that happened with these Japanese candles that triggered an alert. So instead of you having to come read the candles, you having to come do all of the heavy lifting, the Vibrata does it for you. So you notice that, okay, what could have possibly triggered this? You know, is this candle engulfing? You know, over here, do I got a tweezer top? Do I got a doji? You know, do I got a harami? What is it that I'm looking for, right? All these candles are important, just so you know. So, but you don't have to figure that out. So you notice that this action right here triggered a alert, entry trigger. So now how do I combine that and help you understand with the BYOB cash out? So that doesn't mean I take the trade though. It doesn't mean I take the trade. When I mention areas of value, those are what you call moving averages, is where if you study price action, you study like how the market moves, it's moving averages. You're also looking at the trend of the market. Remember, the trend is your friend. And then you're also looking at support and resistance lines. So those are your 3 areas of value that you're looking for when you take a trade. Well, the stochastic has moving average in it. So that's a part of it. So there's your moving average right there. So it's tied into it and calculated into it. So then you have, these are Hikinashi candles, they're trend candles. Voila. You only need one area of value to determine entry trigger, right? But voila, here it is. I have another one. And then your support and resistance lines, we just discussed, where does this typically happen when you get this reversal with your PSAR? It's at those lines. So you actually have 3 areas of value, and that's why the accuracy on this is so high. So even if I'm looking at something, if I'm looking at trends, and this of course is a higher time frame. So if I'm looking at, oh, that's a nice, what you call it? So if I'm looking, oh, look at that drop. Ooh, that's on a 4-hour chart too. We missed that. So, but if I'm looking at what was I saying? So if you're looking at something and you're trying to figure out, when do I take it? So understand the entry triggers. This, and then you got your, of course, you got your support and resistance lines that always happen. So they cross, right? They're gonna cross. So you notice when you got your trend, we talked about impulse, correction, continuation, correction, continuation, correction, continuation. Okay, we talked about that. So if I got impulse, then I got correction. What happens? So I know this is in an uptrend. I know that this is up. I'm not selling right here. So everything I do right here, you know, from a swing trading or whatever, just like what we looked at here, right up, it's gone. But just like we looked at, that was moving up. So, but I get an entry trigger here, okay? I get an entry trigger here. I'm gonna get a trigger there. I'm gonna get a trigger here. I'm gonna get a trigger, oh, wrong thing. I'm gonna get a trigger here. Okay, I'm gonna get a trigger at all of these points. So you normally have to try to figure it out. But the Vibrata is gonna give you those triggers. Now what you do is apply the strategy to determine, do you take the trade? So you're gonna get entry triggers at all of these. So when I get this alert, that's why you never see me say, okay, it was called at this price. Because I just know that this will be a call price. 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 Okay, that's what those are. But do I take the trade or not? No matter how you trade, you got to determine if you take the trade or not. So I know I got an entry trigger, so that I know, but do I take the trade? So if I'm in an uptrend, this is where they say the trend is your friend. This is where I would enter the trade. Voila, bam, it comes up here. And then when this is that pullback, if you're, you know, price action or whatever, just traditional trade, you're not trading this. This is that correction. You wait for it to get here and you take the trade to this resistance line. That's how you typically are trading. So what this does is it gives you that alert and you get that. Now I need to determine, do I take the trade? That's why you don't have to take all of them. But with the BYOB cash out, because of what it is, you put yourself in a position, you know, based on what I just explained, that, oh, I can grab pips this way. After that, I can grab pips this way. Oh, that's 43 pips. I can grab them this way. I can grab some pips this way. Oh, that was 151. Because now I'm on a 4-hour chart. So understand that you will have some significant pullback. So stick with the 15. It's just that that's the one that we pulled. So, right. So you grabbing pips in each direction based on the entry triggers and accurately applying the BYOB cash out. So that's why you can trade with the trend. You can trade the swing of the market, which will show you that correction. You can do all of that. So hopefully that actually answered your question and made it a little bit clearer tonight. And yes, I'll do another session. We'll be back here on Thursday. We're actually on Thursday, we're gonna try to take this and apply it to this and actually take some trades. Okay, that's what we're gonna do Thursday. So, but you can also go back and watch last week's recording as well. So That's actually been posted. It's been uploaded. So it is just about time to transition this call. You're very, very welcome. Any questions, comments? Last minute question, last minute comment. Last minute question, last minute comment. BYOB challenge, YouTube. BYOB challenge on YouTube. BYOB challenge on YouTube. You are welcome. You are welcome. So we went a little bit over tonight. I wanted to make sure I got all of your questions answered. We went a little over tonight because there is no talk with the finance doctor. He is actually traveling. You know, you don't want to miss his calls though. As I've told you before, he's an educator. He's been the CFO. He's done the consulting. So over 25 years experience. So anything that you want to do, anything you want to know about finance, he's got a PhD in finance and economics. So he is definitely someone that you want to make sure you stay around and hear his calls. And the recordings are located at BYOB Challenge on YouTube. BYOB Challenge on YouTube, and it's going to be uploaded there as well. Now, so on Thursday, you want to make a plan for you to be back and also make a plan for you to stay and listen to a talk with the finance doctor. BYOB, financially educating 1 million families, 1 million by the 28th of March, 2021. And what that entails, it begins with you. It begins with you understanding you're the signal. It begins with helping you understand the why behind the what. And that's also what Dr. Bythewood brings to the table. So definitely helping you understand that, definitely helping make sure that you are the signal. And that's why we take the time with you in the evenings to make sure that you understand how to take the trades and you actually understand the market talks. BYOB Market Talks, helping you read the charts, helping you understand, helping you confound. So when we say, are you the bank? When we say you walk in that, I am the bank, you know, Dr. Craig Bythewood, that's his name. So when we say you are the bank, I am the bank, then that's where that comes in. And we want you to create that expectancy. Make sure you create that expectancy of what's going to happen with your finance. I'm strong on faith and affirmations, and you have to walk in that. And speaking of that, I want to make sure you're with us this Saturday. That's this Saturday coming here in Jacksonville, Florida. Jacksonville, Duval. So make sure that you are here in Jacksonville. Make sure you get registered. We're talking about faith and finance. Women Teach Forex. What is Women Teach Forex? We're talking about transforming your mindset, empowering you, showing you you're appreciated, commit and honor. That's what it is. And that's why it's not just for women. That's why this movement is for everyone. Faith and finance. Activate your faith so you can literally become your own bank. You see the registration, BYOBworldwide.ticketleap.com/Jax. $15. Your guests are free. Make sure you're here. The value you're going to receive. We're here to empower you. We're here to educate you. And we're here to give you all the information that's been hidden in plain sight. So do not miss this event. I promise it's not something you want to miss. Ladies and gentlemen, I have had a wonderful evening with you all. This has been phenomenal. And I need you cashing out. When you cash out, I need you dropping it in the chat. I need you looking at everything. And of course, I want to come to Maryland and DC. Of course. So BYOB is worldwide. This is a worldwide movement. So, but this weekend, I want you to be there. And in the morning, 5 a.m., you'll be cashing out. You apply the strategy, apply the tools. It does not matter the day, the time, understand it, and you are definitely going to be able to put yourself in profit. I love each and every last one of you all. It's been a wonderful evening. You all have a wonderful evening, and I will see you in the morning so we can cash out, and this will officially conclude this call.